scale LNG and downstream projects. Her current focus on Southeast Asia and the South Asian markets. And another panelist, Mr. Yash Shah, Senior Vice President, Global Structured Finance Asia at SMBC. Yash has more than 11 years of financial advisory, loan structuring, and a range of experience with expertise in infrastructure, power, oil and gas, and mining sectors. And our another panelist, Mr. Tomohiko Nisu, Deputy Director at the JBIC. As Deputy Director of New Energy and Power Finance Department 1 at the JBIC, Mr. Nisu covers downstream sectors like gas-fired power project. And our next panelist, Mr. Nasirud Doulah, a partner at Doulah & Doulah in Bangladesh. With 15 years experience in legal arena, Nasir has established himself as leading legal personality in this region in the fields of M&A, project finance and development, and construction, with extensive expertise in power and energy, PPP, and financial sectors. A few recent highlights include acted for IFC and Accelerate Energy in project development and financing, or the first LNG terminal project in Bangladesh at Kelly, successfully represented Shenzhen and the Shanghai Stock Exchanges in acquisition of Dhaka Stock Exchange, and represented Zhenhua Oil in its successful bidding to acquire 3 gas fields from Chevron. And our last panelist, Mr. Derek Tan, Vice President and Vice President for Project Finance at MUFG. Sorry, we missed his short introduction, so let's welcome Mr. Derek Tan as our panelist. So, Scott, can you hear me?
Yes, I can hear you. Sorry,
okay,
no.
So
setting my mic. I can hear.
Okay, sure. So, what do you think? We'll be beginning, or just wait for a few minutes late?
Maybe just give people a couple of minutes. I think we're still waiting for Sophia to join, so maybe we'll just give Sophia a couple of minutes to join, and then we can probably start.
Okay, start at like 5 minutes later.
Sure.
Hi, Yash here. Can you hear me?
Yeah, I can hear you.
Yeah, I can hear you. I can hear you.
question. I think, Nishu-san, we've seen the financing of FSRU and IPP projects traditionally been separated in Bangladesh, as opposed to, the Java 1 model where they were combined. What we've also seen is some projects that initially started as a combined LNG to power project ultimately been executed as power only, and some current ones move from combined LNG to power projects to power only. In your view, is there any sort of reason or rationale or background to this?
Thank you, Scott. Can you hear me?
Yes, thank you.
Yeah, thank you. Yeah, as some of you know, Bangladesh was one of the gas-producing country, but as the project production declines, Bangladesh started to import LNG from Middle East countries. Also, the electricity demand has increased due to population growth. Then some companies, including Japanese companies and Indian companies, proposed LNG to power project, meet increasing electricity demand by combining imported gas. However, after only 2 FSRU has been deployed, Bangladesh government decided to introduce onshore LNG terminal instead of FSRU by a tender process to meet huge gas demand. Given the demand and capacity of LNG terminal, this decision made LNG to power project economically viable. Also, unfortunately, the tender process for LNG terminal has been delayed. Therefore, for the recent executed project, just power-only gas-fired IPP project without the FSRU nor receiving terminal. Having said that, I personally think this trend is not bad to renders. I mean, when we consider the risk allocation of project finance, simply is best. So as long as the Petrobangla related company has an obligation to supply gas to IPP project company under the government guarantee, the IPP project is most suitable to limited recourse project finance.
Yeah, thank you. I think there are some structural simplicities in sort of separating those cash flows and revenue streams as well. I mean, we've seen in some countries where that has been combined, there's a real headache in these LNG to power projects of trying to pass through LNG procurement and LNG price risks through the PPA, and that earlier Bangladesh model of splitting the FSRU and the IPP really did help make those projects a lot more bankable and a lot more simple for the developer community and the finance community to execute on. Derek,
Hi, Scott.
Hi, Sophia. Thanks for joining.
Sorry.
Yep.
I have to dial in. I couldn't log into Zoom. Yeah.
Okay, no problems. We've just kicked off, Sophia, so we just missed the first question on the list that we were discussing. So I think the finance community and the developer community generally sees the model implementation agreement and PPA in Bangladesh as being relatively bankable and quite well structured from a risk allocation point of view. It's quite fair and balanced and quite easy to read and understand. But it may be helpful to sort of hear from some of the bankers, and I'll start with you, as to what are some of the challenges, notwithstanding quite a robust document structure, what are some of the challenges or difficulties in the market?
Sure, thanks, Scott. Yeah, I think relatively, I think the implementation agreement and the other government-facing agreements like the PPA and the gas supply agreement, it generally tends to work pretty well. As we can all see, the electrification rates in Bangladesh has improved significantly since. So I guess it's without a doubt that it's been a cornerstone. I mean, the model documents have been a cornerstone to the power projects in Bangladesh. However, I think what we have seen recently is that as the power sector develops, right? I guess the BDB on one hand and probably the government of Bangladesh on the other is trying to probably gradually tweak some of the risk allocations here and there in the documents just to test what the market can accept. So I think from our end, I think what we understand is that there is certain issues and concerns there or challenges in the developments or financing of these power projects. And I think the main one that we saw was the interaction between the PPA and the gas supply agreement. Of course, both are being guaranteed under the implementation agreement from the government guarantee from GOB, right? But I think one major concern that we saw is that the failure of an upstream facilities, it became a project company risk, which shouldn't be the case, right? I think in general circumstances or risk allocation perspective, this upstream failure of this upstream facility should generally be probably from a gas supplier kind of risk perspective. But becoming a project company risk is a tough one, and I guess lenders from a financing perspective, it's very difficult for us to take. So I think the implications there is that I guess the gas supplier PPDB needs to be aware that both sets of documents here, there is huge implications with one another. So I think when it comes to improvements that can be made on this sort of so-called the LNG fired or LNG power transactions, there needs to be a little bit of alignment there between the PPA and the GSA, and that should somehow be fixed and resolved. Yeah, the gap needs to be resolved for this one. Yeah, I think the other concerns that we have or we saw recently is the US dollar availability guarantees are also getting increasingly difficult to obtain. So meaning to say there is no US dollar availability guarantee within the implementation agreement, right? So I think it impacts on the credit analysis from the financiers perspective, and we probably have to look at other avenues to try to gain comfort on it, like looking at the economic fundamentals of Bangladesh, for example. I guess these are also one of the problems that I mean, it's it becomes magnified when it comes to termination payments, for example, if they are actually made in local currencies and there are no US dollar availability guarantees. Yeah, I think the other point that probably we kind of experience, not too major, but I guess something that should be fixed in a way on the model agreements are that we all do know that the implementation agreement allows for certain benefits to the project company. For example, like stamp duty exemptions or corporate tax exemptions, approvals from the central banks on financing, on FX here and there. But I guess there is certain issues there when it comes to the time required to obtain such exemptions. This inconsistency here potentially lead to certain delays in financing, for example, things like stamp duty exemptions, for example. If this takes a while to obtain, generally it pushes the financing process further. So yeah, I think this is probably one thing or two that probably if it's fixed, I guess financing is probably easier to be done. And developing power projects will probably be easier as well.
Yeah, I don't know if anyone else had any other things they wanted to contribute on that.
Yeah, perhaps maybe just to add, thanks, Eric. I think it was, you summarized all the key issues quite well. Of course, there is, along with the lack of dollar convertibility assurance, we don't have offshore accounts as well. And I think we've seen a little bit of a divergent view when it comes to power industry versus LNG or FSRU per se, in terms of the willingness of the government to do offshore accounts. So I think that's another point to be noted and considered. And last but not the least, but two more points which I just want to highlight is still remains a very regulated activity in terms of doing financing in Bangladesh. So the level of approval requirements from BIDA, Bangladesh Bank, are quite material and sometimes could be a bit onerous. So I think, of course, if this process can be simplified, I think that can leverage further financing. And last but not the least, in theme of this sort of LNG to power, I think one of the issues which Derek mentioned is the lack of visibility or the or other in terms of risk allocation, the project company bearing the upstream event risk. It is also kind of, exaggerated by the fact that we don't have a lot of visibility in terms of the whole supply chain. So, while BPDB and GOB effectively are taking the risk in the long run for certain short-term events, basically we don't have any cover under the project documents. And on the other side, we don't even have a lot of visibility in terms of the overall supply chain. So it becomes a very difficult risk to kind of, navigate unless, we have that visibility. So I think that's something that also has affected the overall financing landscape of it.
I mean, thanks, Yash. I mean, Nishio-san, JBIC recently financed their first IPP in Bangladesh. It might be helpful to hear if there was any specific challenges that JBIC faced that haven't been mentioned, given that Bangladesh is moving from that sort of DFI, MLA model of financing into that ECA world. And it seems like going forward, ECAs are likely to play an important role in the further development of Bangladesh's power sector and their LNG import infrastructure.
Thank you, Scott. Yes, as you introduced, JBIC signs a loan agreement for Reliance and JERA Meghnad IPP project this July. And as you mentioned, that is the first IPP project which JBIC financed in Bangladesh. Fortunately, as Derek mentioned, most of the project documents like power purchase agreement, gas supplier agreement, and implementation agreement are quite bankable. But there were still some challenges we faced. Firstly, foreign currency conversion risk. I think Derek mentions US dollar availability guarantee. So that's it. So the tariff payment as revenue is linked to US dollar, but paid in Bangladesh local currency taka. So there is a risk that the Bangladesh commercial bank can't convert this taka into US dollar in a timely manner to pay the debt repayment. Previously, the Bangladesh central bank guarantees the dollar availability under the implementation agreement until last year. However, they changed the policy in 2019 not to provide the guarantee anymore. So of course, we thought that it's natural for the central bank to guarantee dollar availability in the developing countries like Bangladesh, and tried to renegotiation, but they refused. And actually, some other international lenders signed loan agreement without such kind of the government guarantee. Then we have our country risk department analyzed and considering the Bangladesh good track record, like no rescheduled history or robust foreign currency reserve or accounting bank experience. So we ended up accepting it. And secondly, the upstream event risk. So the project is originally, this project is originally designed for LNG to power project, including FSRU. So the project company was supposed to have responsibility for upstream risk, such as breakdown of LNG terminal or LNG transport ship or LNG transport pipeline, etc. So even after the project scope has been changed from LNG to power to just IPP project, the gas supply agreement has not been changed, and sponsor executed the gas supply agreement. On that basis, the project company has the upstream risk. So of course, lenders tried renegotiation with Bangladesh side, government side, but they refused because just it's signed already. So as you know, it's very difficult for lenders to take the project-on-project risk. In this case, the upstream LNG transport and regasification risk on top of the power project. Then lenders discuss risk allocation with sponsors again. And I can't disclose in detail, but in short, sponsors ended up covering that risk. And the last but not least, the COVID-19 risk. So this project is originally supposed to achieve financial close this May due to the requirement under the PPA with PPDB. However, as some of you know, the Bangladesh government announced lockdown from this March to this May. So the situation is not ready to achieve financial close. Fortunately, epidemic is defined as one of the force majeure events under the PPA. So we may seek time extension to Bangladesh side. having said that, the EPC contractor would like to have a right to claim cost increase in case of the second wave of COVID-19. From lender's perspective, the right may jeopardize the fixed price concept of EPC contract. So we heavily negotiated and finally agreed to set a kind of cap on the cost increase to the level we can absorb into the contingency budget. And for your second question, Bangladesh has already been definitely a market JBIC is very interested in and focuses on. Previously, our main target in Asia is Southeast Asia, like Indonesia and Thailand, as well as BBB credit rating countries, because many Japanese companies are keen. However, recently, Japanese companies are shifting from these countries to the new frontier, like Vietnam or Bangladesh, around BBB credit rating country. So also Bangladesh is known as a pro-Japanese country. So as a policy-based Japanese governmental bank, JBIC has a mission to support overseas expansion of Japanese company. So we are very keen to provide finance to Bangladesh projects to support Japanese companies. Thank you.
I think you'll make a lot of people happy hearing that JBIC is keen to support more development in Bangladesh. But I think we have a question from the crowd, from an anonymous attendee, which sort of flows on from the questions we've been discussing, and that is, do any of the panelists find any uncertainty or concerns around the ability for BPD to pay the capacity and energy payments, or any future capacity or energy payments, given that the BPDB is sort of a loss-making entity in essence?
Yeah, maybe I'll give my thoughts actually, at least on this. No, yeah, absolutely right. In terms of the financials, BPDB, as you mentioned, is indeed a loss-making entity, but I think they are well supported through GOB payments that they have got on a regular basis, on an annual basis. So in this regard, I think eventually we feel that we still, I mean, of course, we are comfortable in terms of BPDB's payment track record. We have financed one project already, which, where the drawdown has happened. The other project, which Nishu-san mentioned, the drawdown will happen shortly. But in terms of the payment track record, I think it's BPDB has shown a satisfactory track record. Of course, to take a long-term risk, though, in Bangladesh, I think we still need support in terms of political risk mitigation. So, in terms of either cover from what the ECAs or multilaterals in terms of, breach of contract would be required. And I think that's kind of one of the critical elements that we need to evaluate. Last but not the least, of course, I think currently, and this is the whole power industry dynamic in Bangladesh, still quite a bit of it is dependent on the more costlier HFO projects. And, of course, they are not able to pass on the full electricity cost down to the consumer. So eventually, once the overall cost of power reduces through a more diversified mix, as well as some sort of relative potentially gas, as well as some renewable component, hopefully the overall cost of power would try and come down. And then on the other hand, of course, as the kind of economy grows a little bit further, they would try and pass on this cost further to the consumer, leading to BPDB's kind of improvement in the financials. Of course, is this going to happen in the short run? The answer is no. But eventually, I think in the future, that is something that that bodes well for BPDB. Yeah.
And BPDB certainly isn't alone in this in Asia. There's a lot of the power utilities that are in essence loss-making, but they perform a critical role. And countries maybe at the earlier stage of that development of the IPP industry, such as Bangladesh, generally do have the government guarantees and the government support, which really helps, I think, ECAs and lenders take comfort from the payment risks as well. I think, Nasirud, you've been sitting there quite quietly the whole time, and we heard some of this in the last call. But with the Matabari terminal potentially coming online, and maybe even another FSRU, as we heard from Woodmac, although, as I understand it, the government is much more keen on pushing the land-based solution at this stage. I guess the question legally is there room for the private sector to import or act as an importer of LNG to Bangladesh, and if so, or if not, what are the challenges to that?
Thank you, Scott. Can you hear me?
Yes,
okay.
We can hear you.
Yeah. So yes, you're right. From the very beginning, the policy has been that Petrobangla would be importing the LNGs and they would be supplying to the relevant LNG to power or FSRUs for regasification and then feeding to the power production. So that has been the policy, but the government is aware that the private entrepreneurs are also interested in importing LNGs themselves. And accordingly, the government has actually in May 2019, it has actually enacted a policy which says that the private entrepreneurs who have permission to operate LNG infrastructure, so they can import LNG themselves. So the main process is that once they have the permission to establish one infrastructure and they have it, they can apply for one no objection certificate from the Ministry of Power, Energy and Mineral Resources. That is the Energy and Mineral Resources Division. So they need to seek one no objection certificate, and after checking their credibility and readiness of the infrastructure, so the ministry will be issuing one no objection certificate for them, which would be effective for 1 year, and within that period that entrepreneur can actually import LNGs themselves. And once this period is over, they have to apply for the NOC again. And after again verification and having verified the compliances, the ministry would be issuing the NOC again. So it has been enacted in May 2019. Not that much, I think, development after that. And I am not aware if anyone has obtained an NOC or not. Perhaps because there was very small scope at this moment, because two of the FSRUs, the government is themselves, the government itself is supplying LNG to them, and some of the projects are in the pipeline. But as these projects go to achieve commercial operation date, then we may see that the entrepreneurs are having the NOCs to import LNG themselves.
I mean, I think staying with a similar theme, one of the questions from Imran from the audience is what are the challenges for LNG-based power compared to domestic gas-produced power, and how do the comparative tariff economics work? I mean, my understanding is essentially that the PPAs don't really differentiate. You have a GSA with Petrobangla, and whether they get it from LNG or gas is really neither here nor there. You have a price you agree with Petrobangla, and then a price you've got under the PPA with the government. But Nasirud, is that also your understanding?
So if I have understood the question correctly, so it has been asked that what would be the difference between gas-based power plants and the LNG-based power plants. So yes, there would be 2 or 3 dimensions for that. That is, when the government actually executes one fuel supply agreement, it can either go for only gas, it can either go for LNG, or it can just go for supply of fuel. So if it goes for gas, there is a risk that there might be some scarcity in the future because our deposit is decreasing fast. If it is LNG, that would also be depending on market volatility. And if the government actually takes a no specification fuel supply agreement, so the risk is minimal. But if someone goes for LNG, that needs additional processing, that when the LNG comes, it has to be regasified. So that's an increased cost, but also that makes you future shock-proof and I would like to say more risk avert if the local gas reserve is at any time drastically decreases. So at the cost of this additional infrastructure, the producer actually having some security. If gas is not there, they can run on LNGs, and anyway, the plants that can run on LNG, they can also run on gas.
Thank you. So Pia, from what you've seen, and you know, SocGen's been quite active in looking at Bangladesh and speaking to investors. Has the impact of COVID impacted bank or investor appetite for projects and investments into Bangladesh? You're on mute, Sophia. You're on mute. There you go.
Hello, can you hear me?
Yeah, can hear you now. Can hear you now. We've lost you again, Sophia. Okay, maybe we'll circle back to that question while Sophia sort of fixes her sound. But I guess, Yash, sort of following on from a similar question, and we can circle back on the impact, but what are the sorts of sponsors and types of investors that you're seeing going into Bangladesh? And do you think the land-based, the Madabari land-based LNG terminals will change this in any way?
Yeah, that's a good question, of course, and I think we would be interested to hear Sophia's thoughts on the impact of COVID. In terms of the investor class, I think we see different kind of investor class on the upstream side and on the downstream side. Of course, upstream side we have seen, variety of players, American as well as regional, who have been active. We see that activity to remain. I think there is more interest coming in from Middle Eastern parties as well, which traditionally, have not really invested so far in Bangladesh, but they have sort of the cultural similarities, and there is a potential for them to come in. In terms of the downstream on the power side, we see large appetite coming from Japanese investors, as Nishu-san correctly mentioned. I think the frontier has moved from Indonesia or Thailand to more sort of developing markets or frontier markets in the double B handle in terms of getting the necessary yield, plus of course lack of infrastructure availability. So we see Japanese investors not doing only projects on the ground in terms of actual projects, but also investing into companies. As you know, JERA invested in Summit Corporation, one of the largest players in Bangladesh. Last but not the least, we have also seen recently activity coming from financial sponsors. Again, I think the story with Bangladesh in terms of currently the power mix and potential for it to go into the more cleaner aspect in terms of either LNG or gas or renewable side, I think that has attracted quite a bit of interest from financial investors as well. We are currently working with one of the financial investor who's looking at a transaction in Bangladesh. So I think that's the overall investor class and mix, which remain interested. And I think going forward, I think we see more action coming from both regional as well as international names, especially I would say some Middle Eastern names as well. I would not be surprised if we see more activity from them.
And so, Pia, I'm not sure if we can hear you now, but just rounding back on that question, has COVID impacted bank or investor appetite for Bangladesh?
Hi, can you hear me now, Scott?
Yes, we can hear you. Great.
Okay, great. Not much luck with technology today. Thanks for the question. No, I think based on our observation, we haven't seen any material impact on in terms of appetite from both investors and banks, as actually in line with what Yash mentioned. I think generally investors and financiers tend to take a long-term view, and currently, the demand and supply fundamental in the country remained, a compelling story for investment. This being said, based on our experience, we also see like banks and investors are obviously scrutinizing a bit more in their credit analysis, just the impact of COVID, on the project development progress, construction cost, timing, and any sort of short-term impact on the project's performance in terms of generation and receipt of payments in time, and generally just how the government has been reacting to to COVID, and also helping some of these projects get along. Like, for example, by recognizing that COVID is an FM, and then allowing that as a pass-through event under the different contracts, ensuring that projects are not being penalized because they are delayed because of COVID. I think what could impact the appetite of investors and lenders, I think, really be, if there's a material shift in the government's policy or plan in terms of, what is the strategy in the building new power capacity, the strategy in the energy mix, the shift from coal to gas or to renewables, for example. A few years ago, we regularly saw new projects announcement in the press, every other day. In fact, you always see new projects being announced or new MOU signed. So I think there hasn't been a lot of news on that front in recent time. It's gone a bit quiet. I think we're sort of waiting to see how some of those deals have progressed. And I think what's important is a reinforcement message, perhaps from the government, from, again, policy strategy on the outlook and their plan on how they're planning to to develop these projects. I think that will be very well received by the market.
Thank you. Sort of touching on some of those I guess Middle Eastern investor themes. I think Nasirud, one of I guess the features of the Bangladesh power financing market when we compare it to, say, the rest of Asia, other than maybe Malaysia, is that Islamic tranches are quite a common feature of financings for projects in Bangladesh, maybe borrowing more from the Middle Eastern markets in that respect. Do you think that this is a trend that will continue or even increase the use of Islamic tranches for financings in Bangladesh?
Yes, actually Bangladesh is a founding member of the Islamic Development Bank, which has quite keen interest in the market. And from the very beginning, it has been participating individually and also with other multilateral development banks like Asian Development Bank, and not IFC, Asian Development Bank especially. They have participated together under syndications, although it is a little bit difficult, but the arrangements or the relevant documentations have been already made compliant to the local laws. So they have actually participated in a number of infrastructures in syndication, and Islamic Development Bank is continuing and renewing its interest in the country, perhaps because more and more investors are also showing keen interest in the market. So it is expected that they would be continuing doing that, and we would be seeing more and more participation from them, either under syndication or individually in the infrastructures. But most importantly, Yash has already touched that some Middle East investors are also showing interest, and especially from Saudi Arabia and UAE. So those investors are having some interest in the market, and some of the investors have already entered in some memorandum of understanding. And it is expected or anticipated that once those projects come under development, they might bring some finance that the financiers would like to inject in form of Islamic tranches. So yes, you're correct that perhaps we would be seeing in the future more and more tranches in Islamic Sharia compliant ways.
Okay, great, thanks. We've had a few questions from the audience, and so maybe I'll just throw these ones open to the panel, but maybe one that I'll leave open to the panel from me first. I think it's been mentioned that Bangladesh has financed a couple of FSRUs, and we worked on those with Accelerate, and really those have been done on a kind of almost a more ship financing basis in some respects, which is not unusual. Now that we're moving towards a land-based terminal, and obviously it's not as easy to sail away a land-based terminal if there's issues on a termination or a non-payment. What are some of the challenges, or what are some of the things you think that the Petrobangla will have to look at or think about to should they be borrowing from the IPP sector, the model more, as opposed to using the FSRU model for those financings? Or what are people's thoughts on that?
So is this question directed to me?
It's directed to anyone who wants to answer it, Nasirud. The rest of the questions, we don't have a specific person, so anyone can jump in.
It's a difficult question. It is a difficult question.
Look, it is a difficult one. I think one of the things I was hinting at really there is when you look at the termination payments regime and some of the risks, I think lenders do take a different view when the key piece of infrastructure is something they can arrest and sail away, and that gives them a really strong self-help remedy, notwithstanding there's a quiet enjoyment letter, versus if it's a land-based terminal, ultimately the rights of the lenders, if there's a non-payment or a serious default, are comparatively limited. And so there'll be a lot more focus on things like termination payments and protections around the currencies and what happens if it goes wrong, because lenders just don't have that arrest self-help available to them.
Yes, and also, as you have indicated, perhaps a major bankability issue for such projects would be how at termination the asset could be treated, whether the off-taker is going to acquire that at termination, whether the sponsor would be having the option to sell that to the off-taker compulsorily. That things would come up to decide the bankability of such projects. But as you have said, this is a new project. Let's see what the pulse of the bankers are, and we have many bankers with us. They can also have some insight.
Yeah, I think from my perspective, I think, Scott, as you mentioned, I think they need to take a leaf out of the downstream side, in terms of how do they do the risk allocation for termination situation, especially on land-based terminal, because it's not like, as you mentioned, that you can relocate the asset somewhere else, and as a result of which you are relying on a more robust termination scenario, almost similar to what people would have seen in case of downstream on the power side. So I think that's the direction in which it would likely end up going to.
Yeah, no, thanks, Yash. I tend to agree. Okay, a couple more from the audience. So any volunteers, feel free to jump in on the answers. But how do people see the landscape changing in Bangladesh and regulations and the possibility of opening up the power sector to even more private sector participation in generation, power imports, or even on the transmission and distribution lines? I mean, we've heard earlier that there does need to be some investment on the transmission and distribution in Bangladesh. I mean, do we see that opening up? Do we see the public sector selling off any assets to bring in private money to try and encourage further development and recycle assets?
So I can just add few things here. Actually, we have one long-term vision or power sector management policy, PSMP. So the ultimate target under that policy is that there would be one exchange. Whoever wants can produce power, whoever wants can acquire. That is the ultimate objective. But we are far from going there. We are still far from going there, and we would not like to say that the government is hindering that, because to some extent the government has actually opened the market for the solar sector, because there can be mini grids, there can be captive plants, these sorts of things can be there, but not that much development. So perhaps the market is not ready yet to go there. But yes, the government also would should have some vision, or at least plan to regularize this and have that exchange-based free flow of energy and power in the future, as it has given in the PSM.
Yeah, maybe just to add over here, I think if I'm not mistaken, around 50% of the capacity currently on the generation side is owned by the government and state-owned enterprises. That I think in the long term will change. So the mix of private sector will increase definitely in terms of the generation side. In terms of the distribution, transmission and distribution side, we would assume that in the short run, I think it would still remain more a public sector undertaking, as it is in quite a few of these emerging markets. Of course, in the long run, when the market opens up a bit, there would be private players who may come in. Last but not the least, interesting to hear what Nasirud said in terms of potential opening up for captive projects. I think that's quite an interesting element. That's yeah.
Yeah, I mean, I think the other thing that's quite nascent we're hearing is, potentially 50-50 joint ventures with state-owned power companies and developers coming into the market too. I mean, those do present challenges if you're looking to truly project finance those around the granting of security and controls and conflicts, which can be quite a headache to solve, but we are seeing that as well.
Yeah, thanks, Scott. I was also alluding to that kind of trend as well, where there's a slow. I mean, probably the Reliance JERA transaction is a full private sector IPP, but I guess there are certain projects which are also transitioning from a private sector to a partial one that you were talking about as well. That the local government related entities are taking up like a 51% kind of stake in those power projects. But of course, those will probably come with certain issues as well. I think certain things like approvals process on the government related entities and the budget approvals, uncertainties around those things. It would be good if financiers and also the international developers can fully understand those processes as well on the local government related entities.
Yeah, and given that Bangladesh has IBRD loans outstanding as well, you do get the World Bank negative pledge, which kicks in on those projects, which, as we've seen in Indonesia, is an enormous headache to solve.
Yeah, that's right. That's right.
Another question from the audience. Reports suggest that the subsidy is being given for imported LNG by the government of Bangladesh, in addition to considering a weighted average cost domestic gas price. Do you feel that this will continue long term to make use of natural gas viable for power generation?
Yeah, maybe I can start, and maybe Sophia, if you want to add to this, or anyone else. Yeah, so I mean, I think just ballpark, right? I think the domestic gas cost is maybe around $1.5 to $2 per MMBTU versus imported LNG will be around $10, maybe around plus or minus. And of course, the reality is that in terms of the actual pricing, on the power side, there is a huge reliance on subsidies in terms of subsidizing the gas cost, even on a weighted average cost basis. So at least we feel that this will continue in the near future. There are not a lot of domestic gas. Of course, there is domestic gas, but it's not that there is an unending source of domestic gas. And on the other hand, of course, they need to migrate towards more gas-based capacity compared to HSD and HFO capacity that they are relying on right now. So I think to support the incoming LNG projects, I think this subsidy will continue at least in the near future. So don't see that landscape changing immediately.
Yeah, that's right. And then, I understand there's also, at least in the news, that there's a plan or intention to shift some of the coal-fired power plants, turning them into LNG or gas-based power plants. And then I think that will further contribute to this expectation that the subsidies will continue, especially moving from, I guess, more fixed price coal to more variable gas price basic generation.
And potentially three different landed gas prices at the power plant, right? The domestic gas versus the cost of importing gas through the FSRU and regasifying it versus the cost of importing gas through the land-based terminal and ultimately the pipeline. So you'll have a potential mix of different pricing landed at the door of the power plant there. Another question from the audience is, how does BOOT, so build, own, operate, transfer projects, just compare to build, own, operate as we see in the IPP in terms of bankability? I'll give you the lawyer's answer first, which is it depends on the documents. Basically, you can make either of these models bankable, and there's no right or wrong answer, and it often depends on government policy. But ultimately, it really depends on the key things around certainty of payments and really the termination payment regime, and ultimately having that in place in a robust manner. I don't know if anyone else wants to chip in on that.
No, I think you are the best place to answer that.
Yeah. We rely on your analysis, Scott.
Oh, come on, it's bankability. I just write the docs.
No, I think at least I agree with what you mentioned. Nothing really further to add on that. I think one key thing perhaps to just discuss in terms of one of the key hot topic issue, but I also want to hear what potentially JBIC thinks in this scenario is we see a lot of these news which was floating around last year, I think pre-COVID, that there is a bit of a overcapacity situation in Bangladesh, and we especially with some of these HFO or imported LNG projects with the sort of potential positioning in the merit order, it can get a little bit of a concern as to of course there is capacity payment, but if a plant is not really being used, the reality is that sooner or later that capacity payment is going to be questioned. So what's the sense that at least from JBIC's perspective in terms of the market supply demand dynamic, and how do you view that? Do you think that there is actually oversupply, or it's that all the supply is basically because it's high cost and not environmentally friendly, that this should not really be of a key concern, and the sort of electricity demand from other sources will remain? Sorry, maybe I think Nishu-san missed. I just wanted to hear JBIC's view.
Oh, sorry. Sorry, say that again. Sorry, I didn't expect you to ask me.
So sorry. Okay. No, I was just saying that we see some news in the market with regards to potential oversupply situation in Bangladesh. Of course, then you see DD reports from consultants, and they talk the opposite. They talk about, oh, there is still a supply demand mismatch. A lot of this supply is more HSD and HFO, is not environmentally friendly. It is costly, etc., etc. So we should not be concerned. But just wanted to hear what is JBIC's kind of pulse on in terms of this. How do you see the supply demand situation in Bangladesh?
I see. Yeah, of course it's difficult question. Of course, we usually contacted with a consultant on the project basis, and of course, some of the Japanese utility companies is becoming an advisor to the Bangladesh side. So we are gathering both information, but basically, of course, now too many projects has been proposed to Bangladesh side. So maybe I think Bangladesh government would not adapt all of the proposed project. So they will now selecting and the more appropriate or more competitive one. So until now, of course, on the each project basis, we are relying on the advisors' analysis. But of course, as you mentioned, nowadays COVID-19 might affect some of the demand increase. So maybe from now on, we have to carefully look at each project competitiveness. However, yeah, basically we are not so too pessimistic on that market.
Understood. And sorry to put you on the spot, but no, I completely hear your thoughts. Thank you.
Okay, I think that's very neatly taken us up to the end of our time allotted, actually. Is there any further questions from the audience, either in the Q&A box or the chat box that people want to ask? I think we've still got sort of about 10 minutes left if anyone wants to ask any further questions.
Yeah, maybe a question for Nasirud from me. I just want to understand, I guess, a few years ago, there were more, I guess, FSRU, LNG to power with FSRU project planned, and then, and what happened to the Reliance Bangladesh project was they canceled the FSRU component, and the sense we were getting is like the government is moving towards more land-based. But at the same time, we're also hearing there are a few other FSRU projects that are lingering around. So do you have any view in terms of what the government's direction is on this?
So from the information that I have, the government is now more interested in direct IPP projects. So they don't want to segregate that on regasification part and power production part. So they're more interested on IPPs. The fuel supply agreement, that is anyhow equally applicable for SRUs, FSRUs, or land-based terminals or IPPs. So they would be only taking that risk, because where the FSRU comes up, so there are more risk exposure for the government. That is, they have to offtake the gas from the FSRU or the land-based terminal, and then again they have to supply that to some other IPPs. So that becomes a big issue for them to offtake this one, because it is exposure of risk. That is first thing. And also there is a very large cost for the transmission of the regasified gas. So that's also another infrastructure, because for the accelerated project, they also had to take some very big pipeline projects that also costed a lot. So one of the reasons that the government is considering land-based terminal is that infrastructure cost can be decreased, and the terminal can be placed in such a place that where there are existing pipelines, and that can be just transmitted from that. So that is one interest. And the second interest is that to reduce the risk more, they would be just considering IPPs, nothing extra about what the sponsor is doing to get the fuel from the government to process it.
The other advantage, of course, in a land-based terminal is it just gives more flexibility around your scheduling of your ships, and because of the greater capacity and just bigger size, there's much. It can help you mitigate risks of take or pay payments arising on your SPAs, whereas on the FSRUs, you need to get them right down to the heel and then fill them up, and the timing needs to be matched there, and you just have a lot less storage, so you get a lot less flexibility on that. So if you're a government looking to mitigate the risk of take or pay payments arising when you can never exactly predict your power demand, a land-based terminal does give you more flexibility in that regard compared to an FSRU. Obviously, the downside of a land-based terminal is the time to complete it and potential cost. Yes. and finding the land.
And also what would happen at the termination, the bankability, that also comes into play. Yeah.
Were there any other questions from the audience in either the chat or in the Q&A box? I think if there's nothing else, I think we can pass back over to you, Kevin.
Okay. Okay, thank you, everyone. And I think we have one more question, but I don't know whether it's relevant or not. He asked, what's the feasibility of a pipeline gas from India with the new gas pipeline between India and Brunei? So I don't know which panelist can answer this question.
So is the question is that whether the pipeline built between India and Bangladesh could be used to import gas from India. Is it the question? Okay, I don't have any information or knowledge on that. That is more of a technical question, but the other participant can add. But I think the pipeline was built to just regasify LNG in Bangladesh and then supply to India. As this is a pipeline, I'm not that much technical person. The vice versa is also possible, but I'm not sure whether it can be used in that way in future or not.
Thank you, sir. With that, I think we come to the end of this today's session, and I really appreciate your time, Mr. Doulah, Mr. Lavelle, and Mr. Tan, and Mr. Nasirud, and Ms. Sen, and Ms. Shah. Thank you for your support and expertise in this discussion, and I hope to work with you in our future event, and look forward to it. Thank you. Thank you very much.
Thank you.
Thank you.
Thank you.
Thank you.
Have a good
Thank
day
you.
all. Bye-bye.
Have a good day.
Thanks, Scott. Yeah.
Thank you all.
Thank you all.